Welcome back to Switzer. Back by popular demand is our king of charts, Lai of Accountancy Invest. And it is at a time when there are question marks over the direction of markets. For his very unique take on the future of our stocks, he joins us in the studio. Here's Lancey. How are you, mate?
How are you, Peter?
I've been practicing all afternoon. Now, Lance, last time we were on the show, we always look back at what you said, so let's go to the clip right now.
I need to see in order for the US and the world markets to stop this fall is a stabilisation and a stabilisation also in the gold price.
Okay, so you link the stabilisation of the gold price to what, putting a floor under what might happen on Wall Street?
Yes, because I think just as the gold price fell when the B level broke, and we've really been in a fall since when it broke in February, and then you can see the sharp fall off, you know, in the end of March. We've really, the gold price has led these market falls.
Now I tell you what, Lance, that looks pretty profound. The gold price has done pretty well since then, hasn't it?
Well, it has. I was looking at that chart at the time for the gold price to stabilise.
Yeah.
And if the gold price stabilised, then I thought that the global markets ought to stabilise, and it has.
What date was that? Can you recall?
It was on the 27th of June.
So it was one day after we got a new Prime Minister. It was also around a time when Bernanke brought up we might not taper as much as you might think as well. So there is an interesting... No one understands gold. You might, but no one does. So certainly gold has played an important role. And you want to start with the gold chart tonight, is that right?
Yes.
Let's go to it then, if gold's so important. Okay. So we're waiting for that chart. It's coming up.
There you go. So you can see there, again, from the top left, you've got B.
Yeah.
Now that was back 4 months ago, and we broke through B, which is bad.
Yes.
And once we broke through that bad level, which was 1,654, it basically fell 30% inside of 4 months, and that's all the way to the bottom.
Yeah.
When
that's
I came,
June. We got June. That's the bottom.
That was when I came on, which was just you know, after it hit the bottom there in June, and I said last time, as with the beginning of the clip, if it could stabilise, then we're looking good. I was concerned at the time, and I thought that it could have gone down a little bit further where the S was, and I still maintain that if it does get any more ugly, that S ought to hold. That's $1,130. I think where we're going now is where the L is. The L level is $1,418.
Yeah.
It's about 7% higher from where we are now, which is $1,328. And as you can see, the big yellow line that comes down, that's the 200-day moving average, which is pointing downwards. So there's a little bit of work for gold to recover, and that's where I think the L's going to be.
Okay, let's go to the next one, which is Shanghai. Is that right?
Correct.
Now, why is this significant, Lance?
Well, the Shanghai index last time that I came on the show was just below or just above the B line where the June mark is.
Yeah.
And as you can see in the November show when I came on, which is the N mark, it was again right on the B. So thankfully we've held the B line. Well, we actually broke through the B line.
That's the bloody bad line, the B line, isn't it?
That's the B line. That's a bad line. Well, in November, it held the B line, shot up 25% in 2.5 months, muddled around, and in the May show, which is marked M there, it hit the G level, which was a good level, but it couldn't get through. Came off very hard, and now where we are, we're only 1.6% above the B line.
But do you think they're building up a bit of stability there, Lance, or is still a bit of a threat?
Yes, look, I think it is building up some stability. This is in Shanghai, of course.
Okay.
And I think just like with gold, it's got a little bit more upside to see where the L is. That L is about 4% up, but I showed these two charts because gold shows a stabilising situation. Shanghai is also showing a stabilising situation, but there's a little bit of concern here.
Okay, let's go US S&P. We're running out of time, man, unfortunately. So what are we seeing here?
So the US chart what we've done here is from November up until for 6 months we went up 25%. The June show came off. It bounced off for support, as you can see there, and it's amazingly gone up even higher. So that's gone up now 26.5% in 8 months. Where we are is you'll notice 1744. I thought that we would get to that, you know, projecting that from the March show, and I thought we'd take the rest of the year to get there. Now we're only about 3.54% away from 1744. Now I think when it gets to 1744,
there'll be a challenge.
It'll be a challenge, and I think where we are, we need to go sideways. So the gold chart, we've got to stabilise, come up a little bit. Shanghai, come up a bit, stabilise. The S&P, I think we've got to stabilise here because it's gone up too fast.
Let's go your last one before we're out of time.
In the Aussie market, this is actually a little bit similar to the US market, but not quite as, let's say, aggressive on the upside. The June was when I came in last. It held support, came all the way back to the 200-day moving average, bounced off that quite nicely, and now you can see we're approaching the R resistance line. Again, I think this is like the US chart without the aggressiveness on the upside.
Okay, so just in a summary, Lance, my feeling is you're not very negative at the moment, and there's a good reason to be a little bit positive. I
think it's going to go sideways.
Okay. Right. Well, that's going to be the next clip we'll play. I think it's going to go sideways. We'll see what happens. Mate, thanks for joining us. I'm sorry I'm out of time. Next time I'll give you 15 minutes. Okay. Thanks for joining us, Lance. I'm Peter Switzer. That's the show for the night. I'll see you tomorrow night.